Hi, my loves. It is me, Tila B, the Model Realtor of the Vex Group at Long & Foster, and I am here again with the lovely Kristina.
Hello.
And we are going to be talking this week about credit. So I'm super excited about this week because this topic we get so many questions about. Do you get a lot of questions about?
Always.
Absolutely. So we're going to be able to give you tips and tricks on how to get prepared for purchasing when it comes to your credit. So one of the things that we want to talk to you guys about is the percentages of how your credit is scored. So the highest percentage is 35%.
Yes.
And 35% of your credit score is based on your payment history, correct?
Yes, that's correct.
Perfect. So can you talk to us a little bit about, what credit history is?
Yeah, sure. So credit history is the length of time that you have actually opened and retained credit. So payment history makes up such a large portion of your score. So if you miss just one payment on a credit card, for example, that can help drag down your credit score. So it's very important that all payments are being made on time, because once a payment is not made on time and that missed payment goes on your credit report, it is on there for a considerable length of time. I believe it is about 7 years that it will impact your score. So just know that everything should be paid on time that is reporting on your credit report.
Gotcha. So when you guys pull credit for the lending portion of the qualification, and you see that there are a few late payments on the credit history, how do you guys view that when it comes to giving a borrower a loan?
So I would say it depends on what type of line of credit it is. So you always have revolving accounts, which are things like credit cards, for example. And then you also have your installment loans. So mortgage payments, auto loans, any personal loans where you have like that fixed payment on. So keep that in mind. It's important that all payments are made on all types of credit, but in terms of applying for a loan and how that might impact it, mortgage payment history is very important. We do look at that a lot to make sure, and depending on what type of financing you're applying for, that could depend on if you have to wait a certain amount of time if you have been late in the past. Now, things like credit cards, if you have a couple lates here and there, it's understandable. Maybe there's some sort of accounting mishap. But overall, if the credit score is an eligible credit score for one of our financing products, we can take a deep dive into that credit and let you know if anything is affecting any sort of pre-approval qualification-wise.
Perfect. And thank you for that. So I know when I talk to borrowers, they're like, oh, I have a few things on my credit that I'm ashamed about. I haven't been paying my credit cards on time. So you're basically saying that you don't have to be perfect when it comes to like the credit payments, but you should pay them on time.
Yes.
Basically.
You don't have to be perfect. I think it's understandable that life happens, right? Sometimes things aren't always in your control, but it is recommended that we do pay everything on time. But if something comes up where something wasn't in your control and you do have a late payment in your past or a couple there, we'll take a look at that and let you know if that's all right. If it's not, we'll let you know the next steps to obtaining a loan in the future and about how much longer you might have to wait in order to get pre-approved.
Perfect. So long story short, pay all of your bills on time, but check in with a professional, a lender who can tell you what's going on with your credit, and don't be shy not to pull your credit report, because that's the first step to knowing if you can be approved for a mortgage or not, right?
Yep, absolutely.
All right, so we talked a little bit about the different types of credit. And I believe 10% of the credit profile goes to the types of accounts that you have. So there's revolving, and then there is
installment loans.
Okay, so can you break down a good percentage or a good ratio of how many accounts you should have of each to have a solid credit report?
So we can break it down a little bit, but usually we like to see at least 3 different lines of credit. So if you're new and you are establishing credit for maybe the first time in your life, having 3 different lines of credit would be fantastic. Number 1 is if you're currently renting, trying to get your landlord, like if you're renting in an apartment complex, for example, trying to get your landlord to report that payment history is always highly recommended. But if they don't, auto loan or any sort of small type of personal loan with your local bank can help. and then also credit cards. If you don't have any installment debt though, have no fear, because usually if you just have a couple different revolving credit cards, revolving lines of credit, you can obtain a credit score that way as well.
Awesome. That's really, really good, because when people are establishing credit for a purchase goal of maybe 2 to 3 years from now, it's good to know that you don't have to have credit cards to get pre-approved, but you do need those other different accounts to start the process.
Yes, if you want any sort of credit score, again, if you're new and have never used credit in your past history, you have to work at establishing credit. And one way to do that is to apply for things like credit cards. But I do want to let you know that if you haven't used credit, we do have a product out there to help a borrower that does not have a credit score. Nice. The one thing I would have to say about that though is that we need a rental payment history, we need cell phone payment history in your name. There's a number of different things that we can get history for that maybe you might be making monthly payments on that just don't report to the credit bureaus. So that is also a possibility to know as well.
Good. I'm glad you told me that, because I didn't know that. So as I'm continuing to speak and have conversations with buyers, I'll definitely let them know that if you are in the process of establishing credit and you haven't started, you could still possibly be pre-approved for home.
You could possibly, yes.
Gotcha. So we talked about credit history, credit payment, and we talked about the different types of accounts you should have. Another big thing that affects the credit report is the length of time you've had the account. So can you tell us how that affects the credit report?
Yeah, so again, credit history, credit is built over time. So the longer your credit history, the more your score is going to improve. And then maybe the second that you close one of your credit accounts, that will take down your overall average length of history. So that's why closing credit accounts can be detrimental to your score. And if you ever talk to a professional credit expert, or even someone in my role as a mortgage consultant, we'd always advise you to consult us before closing any lines of credit. Now, things like installment loans, they eventually do close out because you make all of the monthly payments on that line of credit, and then the balance eventually equals zero. But things like credit cards, that is a great example of what I mean by consult with us before closing that account. My recommendation to you is, if you have a credit card and you are not using it and you're like, I want to close this account, stop right there. Just take your credit card, put some scissors, put a scissor through it, chop it up into little pieces, throw it in the trash can, and then eventually your creditor will close that account on your behalf because you're not using it. But think about that. All of that good payment history has been set behind you in your credit profile. So it can really help build your score over time.
I'm glad you said the cutting up of the credit cards. When we were purchasing our house, we had to pay off our credit card debt. Like, I loved using my credit cards because I worked at the mall and I had like every store card that you could imagine. So it was just easy for me to swipe, but that was not good because it wasn't helping us get to the goal of purchasing. So I politely paid them off and cut them up, and then they closed them out. So yeah, I'm glad you said that, because I thought I was doing a little bit too much, but hey, I mean, sometimes you gotta do what you gotta do.
Hey, you gotta be secure in today's day and age. You never know. So cut them up, make sure no one else can use them, and you get all that good credit history behind you as well.
Awesome. So we talked about 3 major things that affect credit. Can you tell our buyers a credit range of where they should be shooting to get to purchase?
Yeah, so I always say shoot to have at least a 700 credit score. That is what we consider a good credit score. Anything really below that, you might be in a poor to fair range. Not to say you cannot obtain a loan when you are when you have a credit score in that poor to fair range. We fund loans all the way down to 580. But if you are in that range, just know that some of your terms might not be as favorable. You might not have as many loan products available to you as if you had, above a 700 credit score, for example. But here at Prosperity Home Mortgage, we do loans all the way down to a 580. I can definitely help you out, and I would love to help improve your credit score if you're interested in doing that as well.
Alrighty, well, you've heard it straight from Kristina's mouth. Pay your credit, pay all your bills on time. And if you have questions, we always want you guys to reach out to your professional, me as your realtor and Kristina as your lender, just so that we can continue to move you guys forward. We understand. We've purchased homes, and we've helped many people get into homes. So if you have any questions, we're able to get you those answers.
Yeah, absolutely.
All right, so that concludes our week. I hope you guys have learned a lot about how to prepare your credit for your purchase. So Kristina, if they want to use you as their lender, how do they contact you?
Thank you. Yeah, absolutely. My cell phone is 443-257-2715 or Kristina with a K at phmloans.com.
Awesome. And guys, you know, I'm Tila B, the Model Realtor of the Best Group at Long & Foster, and we will talk to you guys soon. Bye.
Bye.